Last time on the investment series, we met successful business owner and father, Stephen Crow. Together with his financial advisor, David Ray, we learned that success with investing comes from staying true to your philosophy. And we saw 3 elite money managers share their investment philosophies in their own words.
Everyone can gain access to information. The trick is about interpretation of information.
Delivering intelligent investment solutions in a cost-effective way.
By being more open-minded, you can certainly change the way your brain thinks and operates.
We've had help from our expert, Bernard Del Rey, who mapped out Stephen's economic fingerprint, his very own investment philosophy on paper, and his personality type, the conservative, meaning he's protective of his money when making decisions for his retirement.
Here within the game, we basically saw that your tolerance for risk is actually low to moderate, which we need to think about.
And Stephen's advisor, David, sat down with our guardians, the heavyweights of the investment industry, to flesh out the big questions they need to ask our money managers to help Stephen make the right decisions. Today, Stephen and David get the unique opportunity to go behind the scenes and watch our guardians grill our money managers around their investment philosophies. The guardians are the investment industry heavyweights, who are responsible for ensuring only the highest quality investment products reach the public.
Our relationship with managers needs to be a working relationship.
I wouldn't say it's collaboration because we have to provide objective opinion and insight on those managers.
It's up to us to make sure that members can feel safe when they're investing with our company, to make sure that they've got the best access to the best possible investments.
Amanda Gillespie is the joint CEO of Lonsec Fiscal Holdings. David Wright is the director and joint founder of Zenith Investment Partners. Matt Heiner is the joint managing director of Net Wealth Group. First up to meet the Guardians is Kerr Nelson, the managing director and co-founder of Platinum Asset Management.
Hello, Guardians. I'm here today to tell you how we at Platinum Asset Management look after investors' money. We invest from a global perspective. We're all based here in one office in Sydney, and we travel immensely, searching the world for interesting investment ideas. And that's the key differentiating point, because if you think of anything that is valuable or interesting, it'll have points of differentiation or scarcity. What we see in the investment world is that most funds will tend to track the index they're marked against. We are completely agnostic about that benchmark. We simply want to invest in what we think are the most interesting investments around the world. And we know this works because we have a very clear view that the majority of investors, like the majority of the human species, are influenced by the idea of using shortcuts to come to conclusions. You pay so much attention to all the news and goings-on in the very short term and miss the bigger picture. So we try to exploit that as we search the world looking for companies which are influenced by those factors. We bought a company called Carnival Cruises, and we bought it shortly after the Costa Concordia flipped off the coast of Italy. The stock halved. We then started to look into this and said, well, that's fine, but is this going to change people's behavior towards holidays on vessels? And as a consequence, it turned out to be a marvelous opportunity rather than a threat, and the stock more than doubled in the subsequent 3 years. It's a lot of work that's required to look through a lot of companies, and to help us narrow the field, we use some screening, and we also use themes. So we try to think of what could change today from what is so evident at the moment. And that will set us off on a course of pursuit looking for companies around the world. Thank you, Guardians.
Now that Care's pitched the investment philosophy to our guardians, let's see what questions they have on Platinum's investment approach.
Care, you've been a very successful investor over a long period of time, and part of that is through the differentiation that you've talked about in your pitch. Can you give us some insight into where your investment ideas come from and why are they different to the broader market and your competitors?
It's to try and be a little more expansive in the way you approach your conceptualization and not being at all concerned about what is going on right now. So just trying to look beyond that, and it's psychologically not easy. It's very challenging because all the time the press and the media are on and on about what's going on right now, and it's to get past that.
Care, you talk about buying out of favour investments. What happens when something that's out of favour stays out of favour, and how do you decide when to sell that?
When we do our research, we do write up everything. And as we write those up, there'll be 5 or 6 points that are critical to the storyline. By the storyline, I mean the logic behind buying the company. So those are set out very carefully. To the extent those milestones are not covered, you can see your story starting to fall apart. Now, a bad analyst will want to try and re-engineer that and pretend it's not really happening or downplay something. But because it's all written, and we all understood why we were buying this company, we hold to that discipline. So to the extent they're not producing the goods, you need to start cutting your position or exiting quite quickly. And that's what we'll do.
Our investor, Stephen, is concerned about uncertainty of his investment outcomes. Given Platinum invests in a style that is different to the benchmark, what kind of performance can he expect from your products, perhaps when the markets are performing really strongly and maybe conversely when the markets are not doing as well?
Well, historically, what has been shown is that we've managed to keep up with the market as it ascends, and then as it descends, we tend, because of our protective measures, we tend to outperform significantly. Stephen can't avoid uncertainty with the stock markets, and it's a question of the reward you get in return for that. And so when we try to think about returns, we know over the long term, shares have given something like 6% real, that is in the US, over the last 100 years. So you do get paid for this uncertainty.
You mentioned in your pitch that the identification of themes is an important aspect to your investment process, and you've been very successful at that and identifying themes that eventuate coming forward.
Right.
How have you done that?
Is thinking more broadly. So if you think of China today, it feels pretty bad. You know, you're seeing mass closures of coal mines. You can easily become emotional and say, well, that country's in for a bit of a difficult patch. But if you look at the fact that it's still a massive global exporter, creating a surplus of over $65 billion per month, over $750 billion of surpluses a year, you can see they're highly competitive. So why don't you then look at the other side of it, which is what are people going to be doing? They'll be spending, they'll be buying this and that and other. And so rather than blanketing a situation with that easy negative, we'll say, well, where's the opportunity? So it's a manner of thinking.
Thanks very much, Care.
Thank you, Guardians.
Care's answered all the big questions the Guardians had around Platinum's investment philosophy. It's now time to go behind the scenes and see what Stephen and David think of Care's approach.
Compared to the Australian market, it opens up a lot more opportunities, doesn't it? And I think one of the interesting insights that I found was the depth of research that they go into in those companies and try to identify those themes that we might not have thought of, which are going to provide future investment returns.
Yeah, that's something that's well out of the capacity of someone like me as an individual investor.
Now, in terms of your goals, I think where Platinum works well is the potential for protecting on the downside there. I think for your risk tolerance, that is potentially a good fit.
Yeah, I think you're right.
We've heard from Stephen and David around their thoughts on Kerr Nelson's investment approach at Platinum. Now it's time to meet Alex Vinocour, the Managing Director of BetaShares, to pitch his unique investment philosophy.
Hello, Guardians. I'm here to talk about improving investment returns, about reducing the cost of investments, as well as managing investment risks using exchange-traded funds, or ETFs. As one of Australia's leading managers of exchange-traded funds, we are focused on the needs of the Australian investor. We are focused on delivering low-cost, simple to understand, transparent and intelligent investment solutions to the Australian market. Exchange-traded funds are built like managed funds, but they trade like shares, which means they provide the advisor and the investor with complete control over their investments. ETFs tend to provide exposure to returns of an index or that of a particular asset class, such as the ASX 200 or the NASDAQ 100 index, or the US dollar currency, or the price of gold. ETFs deliver transparency, they deliver liquidity, they allow investors to diversify their portfolios, they allow investors to build the investment portfolios that are much better tailored to their own investment needs. Our investment philosophy at BetaShares is really all about moving that investment conversation away from product focus, from the discussion of my fund is better than yours, and really help focus the discussion on the bigger picture and help advisors and investors get the big picture right, get the asset allocation right, and deliver the tools in a cost-effective and transparent way that help them ultimately achieve their investment goals. Thank you, Guardians.
Now that Alex has pitched the investment philosophy of BetaShares, it's time to see what questions our Guardians have.
Alex, can we perhaps take it back to basics, and could you just explain how an ETF actually works? How is it put together?
For an investor, an experience of buying an ETF is really no different to buying shares. If we take QOZ, for instance, the Fundamental Index 200 Australia Fund, when we receive applications, we will buy the physical underlying shares that comprise that index. So when an investor acquires QOZ, they receive exposure to the physical underlying shares, and as a result, they are able to earn the capital returns as well as an income stream from that underlying investment.
Alex, all ETFs made equal, or what makes BetaShares differentiated from other ETF providers in the market?
Look, Amanda, I would say one of the key points of differentiation for us as a business is the fact that we are Australian born and bred. We spend a lot of our time researching and understanding the needs of Australian investors. We are close to Australian clients. Our product decisions, our investment decisions are all made here in the market as opposed to a foreign headquarters. So ultimately, our product suite is really reflecting the feedback that we are receiving from the market as to how people invest at the moment and also how they would like to invest. Of course, a client that may be closer to retirement might be looking for solutions which are lower volatility, lower risk, more stable than compared to clients who are a little bit earlier in their investment journey. So a lot of it comes down to the information that we as a business are making available. We have started publishing a blog, which is available for anybody to subscribe to. And the idea of that blog is really to be another educational element, to help people along that journey.
Alex, the ETF market in Australia is clearly growing rapidly, but it's still relatively new. What advice would you have for first-time investors and people like Stephen?
I think the benefits of low cost, transparency, but at the same time without compromising on performance is really at the core of the ETF offering. We certainly believe that there is space for both active management as well as investing through exchange-traded funds. We do not think it's one against the other, but ultimately it comes down to the client objectives, and our job as a business is really to deliver investment solutions which help them achieve those objectives.
Thank you, Alex.
Thank you, Guardians.
Now that Alex has finished his grilling with our guardians, it's time to hear what Stephen and David thought of the BetaShares investment philosophy.
What are your thoughts on his investment philosophy around ETFs?
Well, they were quite new to me, but I think they offer two opportunities. If I invest in an index-based ETF, it provides a good foundation stock at a low cost. And secondly, the more specialist funds open up investment opportunities that mightn't have been available to me before.
Yeah, I think diversification is a real message out of that presentation.
It'd be interesting to see how they perform in a low interest environment where, as I'm getting close to retirement and I'm looking for more, probably more secure income, but still want a reasonable return, whether an ETF might be a good alternative to a bond or a fixed interest investment.
I think if we think about it in the context of your risk preferences, there's certainly some opportunities there that might fit in with what we're trying to achieve with your personal investment philosophy there.
Stephen and David have had time to reflect on the BetaShares investment philosophy. It's now time for them to meet Sean Fenton, the Director and Portfolio Manager at Tribeca Investment Partners, as he pitches their philosophy to our guardians.
Hello, Guardians. At Tribeca, we believe in being nimble, flexible and open to different styles of investing. Successful investing is all about blending the science of this successful investment approach with the art of investing. So to do this, our investment philosophy is quite unique, and it's really drawing in different styles of investing that to an extent reflect my experience as an investor through time. And they're broadly a quantitative approach and a fundamental approach. The real strength of this quantitative approach is that it's objective. It takes the human element out of the equation, and so it enables you to rank all the stocks in your universe very quickly from best to worst. And we do have a very well-resourced and experienced analyst team that are able to focus down and find some key insights into different companies and come up with some more focused, high-conviction calls. What we do is essentially blend these different styles together, and this comes up with a very diversified and robust investment process that's quite unique in the Australian market. The other thing that we do that's quite unique is the way we implement this within our investment process. So the Tribeca Alpha Plus fund is a long-short fund, and this long-short structure means that we can do two things. We can tap into an extra source of returns, the short side, that a traditional manager can't, and we can also have a much higher degree of diversification across our portfolio. So we can still target much higher returns, but whilst having a larger number of active positions, giving us a broader level of diversification and a better risk-reward trade-off. It's also important to look at the evidence of how that's performed, and there's a solid track record there where the fund's outperformed in 8 out of the last 10 years, coming up to its 10-year track record. It has very consistent outperformance above the index. That's a period of time that's long enough to come to the conclusion that there's some real skill being deployed in terms of the investment process there.
To take a closer look at the investment philosophy of Tribeca Investment Partners, let's see what questions our guardians have for Director and Portfolio Manager Sean Fenton.
Sean, you mentioned that shorting stocks is a key feature and differentiator of your investment process and style. Could you take us back to basics and just talk us through the mechanics of how shorting actually works?
What you're doing is borrowing some stock off someone. You'll agree to pay them a small interest rate to do that through time. You then take that stock, you sell it on the market. That crystallises some cash for you. You can buy back for less, you make money. Underperformance of the market, you make money. You've taken the cash that you've realised there, and then you can go and invest that back into another company.
Is that a bigger universe of opportunities for you as opposed to managers that are just looking for stocks that they like and expect to go up in value? You're also able to invest or short in stocks that you don't like with a view to profiting from that.
Exactly. New companies coming through to the market creates great opportunities to invest in, but along the way there's always a process of creative destruction where other companies are going to go into their twilight years, might cease to exist, their competitive advantage may be eroded and they'll underperform. So being able to go short and long is really opening up your opportunity set so that you can profit from companies that are in the twilight years of their cycle or even just under short-term pressure and reinvest that and have greater leverage to the outperformers as well.
So given that our market continues to be plagued both domestically and globally with volatility and investors are increasingly uncertain about future returns, does a fund like yours actually help smooth performance and protect that downside in their portfolios?
Where you do have a very weak market environment, say like in the GFC, where certain portions of the market were coming under a lot of pressure, by being able to structure your longs and shorts in the right area, it can certainly give a more defensive outcome, and we did outperform during that environment as well, but is an equity fund and does carry equity risk.
Steve is concerned with risk and capital preservation, as, let's face it, most investors are. What are the sort of risk management constraints you operate under?
We look to really generate a balanced portfolio where our ideas are spread as much as possible across the portfolio, so not taking on a particular style bias to any market environment. We look to construct the portfolio. We do it in a very systematic fashion with a risk model there so that our strongest ideas have the strongest weight in the portfolio and it's well spread across to create diversification.
Thanks, Sean.
Thank you, Guardians.
Sean's answered all our Guardians' questions. It's now time to go behind the scenes and see what Stephen and David think of the Tribeca Investment Partners investment approach.
What were your thoughts on his investment philosophy?
It was quite new to me, dealing with shorting as a major part of the philosophy and using that to open up lots more opportunities.
Are normally neglected by most investors because they only consider the stocks that they think are going to go up in value.
When dealing with Australian stocks, where we've got a pretty small market to choose from, being able to choose stocks that might be falling and make returns on stocks that are falling gives you a lot wider choice of opportunities.
Steve, in terms of your risk preferences, the Tribeca investment philosophy, it might provide a nice complement to some of the existing Australian shares exposure in your portfolio.
Yeah, the shorting philosophy that they use could help us get some cream on our returns because of the leverage we get out of that.
Today, our investor Stephen and his advisor David got to see three top money managers pitch their investment philosophies to our Guardians, the industry heavyweights.
We travel immensely, searching the world for interesting investment ideas. And that's the key.
Delivering low-cost but intelligent investment solutions to Australian investors.
We believe in being nimble, flexible and open to different styles of investing.
Now that we have a clearer picture of these fund manager philosophies and Stephen's economic fingerprint, his own investment philosophy on paper, it's time to put philosophy to practice. Let's sit down with Stephen and David and see what they've learned on the show and what it means for Stephen's financial future. Well, Steve and Dave, it's been a big day, lots of learnings. Stephen, what do you think the biggest outtakes you got from watching these fund managers get grilled by the Guardians today was?
Yeah, I hadn't previously looked at fund managers in the sort of detail that we've been looking at them today, and hadn't categorised them differently and looked at the different ways they could invest and the different goals they had and the different positions they could take in the portfolio for me.
So really understanding a philosophy and why the manager is doing what they're doing. I mean, how has that changed your view of investing?
It gives me a bit more focus, and hopefully I can ask questions in the future of fund managers that allow me to have a more detailed knowledge of what their goals are and how they're trying to achieve those goals.
Dave, what do you think will happen now? Where to here for Steve and his investment strategy?
Well, for us, Vanessa, the next steps are really to nut out the overall strategy for Steve in terms of his personal goals and how individual asset allocation and funds might align with that. So we'll sit down in a bit more detail and come up with a step-by-step action plan to put into different asset classes, individual funds that will align with what Steve wants to achieve with his personal goals.
Thank you both so much for joining us here on the program, because by you opening up your financial goals and Dave being your guide on this journey, you're actually helping everyone else who's watching this show think about their own financial future and how some education and some planning now can make the life they want to live so much better in the future.
It's been a great experience. Thanks, Vanessa.
We hope you've learned from watching our investors and their advisors take a journey to meet different fund managers, their investment philosophies, and our guardians grilling them. A little bit of knowledge goes a long way, and if you join us on this journey, I promise to take you to a level where you can learn enough to let your hard-earned money work for you. The people in the financial services industry do this day in, day out. It's what they're trained to do. So open your mind, spend a little bit of time every week just learning something, and start the journey today. Because it's about more than contributing the minimum to your super. It's about actually starting to look at what money can you set aside to change your financial future. If you're ready to take the next step in your financial future, head to our website, where you'll have the chance to play the game and see your very own economic fingerprint and personality type. You can take part in our learning centre and learn to think like an investor from our experts and some of the most experienced money managers from around the globe. You can also join the conversation on Facebook and Twitter. That's all for this series. I'm Vanessa Stoikov, and I look forward to seeing you next time on the Investment Series.